Welcome to Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Katie Greifeld. Happy New Year, Scarlett
Happy New Year.
Fu.
It's quiet start to the new year, right?
Yeah, quiet, right. Let's talk about that and the biggest stories right now in the nearly $19 trillion global ETF industry. U.S. stocks, as you can see, shrugging off the ouster of Venezuela President Maduro, despite those building worries over geopolitical risk.
We're going to speak with Jim Craige, who heads up emerging markets as CIO of Stony Harbor. We'll get his take on whether it's time to load up on Venezuelan corporate and sovereign debt.
And a fund without a home, the CEO of Tuttle Capital saying that his ETF tied to Washington is being rejected by several exchanges without explanation. All that and more coming up. But as always, Eric Balchunas from Bloomberg Intelligence, he's here with us now and he's looking at the flows. Eric, what do you got?
Thank you, Katie. Scarlett, Happy New Year to you too. I think this is the last day we can officially say that. This is the first show of the year, as we just mentioned, and we've only had one day in the books of 2026, so I thought we'd do one-day flows instead of 1 week. And VU at the top again. Does it ever take a day off? No. 5.8 billion is a ton of money for one day. It broke the record for flows last year. It broke its own record from 2024. So just a beast. It may hit $1 trillion this year or next, so look out for that. This is also an S&P 500, the SPY Mini-Me ETF taken in money. Semis having a good start to the year, so no shock, SMH taken in money. Treasuries, they also took in a lot of money last year. So we had a lot of beta plus treasuries. That was the general trade last year with a little gold. And then we have ag and tech in here. Let's look at the outflows. The Qs at the top, so you don't like to see that. That's a little bearish. IVV, some tax stuff could be going on. We're not totally sure sentiment-wise. All told, net $7 billion into ETF. So seems like a good start to the year. A little bit out of GLD, people taking profits probably from that trade that worked really well last year. And IWM, we'll see. You know, this every year people try to make this work. We'll see if this is the one. Now, let's look at the bigger picture here. We put out a note today about how these reports of U.S. exceptionalism dying in 2025 are absolutely absurd. If you look at the U.S. market, was up 18% last year. That's almost double its annual average. Most investors pretty happy with that. But here's the thing. The money keeps going to the U.S. So regardless of what the headlines say, investors keep piling in. This is a chart showing all the ETF assets that are in ETFs that invest in the United States. That's that line here, way past 10 trillion. These are ETF assets in other countries. So the biggest one is at 2 trillion. So we're over 5x more than any other country. So if that's not exceptional, Katie, I don't know what is.
All right, Eric, thank you. Joining our conversation now, I'm pleased to say, is Cullen Roche. He is the founder of Discipline Funds. Cullen, great to have you here with us in person. I'm taking a look at the Financial Planner's 2026 Outlook Guide, and your first line is, let's be honest, no one knows exactly what 2026 will bring, and that brings us to this past weekend. And I wonder, you know, when you think about what happened in Venezuela, you think about the implications for global oil markets, the implications for EM debt markets. How does a financial planner really incorporate geopolitical risk at this point?
Yeah, it's strange. I don't think financial planners typically think a lot about geopolitical risk. And in fact, when I field questions about this from clients and whatnot, I generally try to downplay geopolitical risk. But this one's interesting in large part because what it does, I think, is it potentially moves things towards the sort of 800-pound gorilla in the room, which is obviously Taiwan, I think. And that one's interesting because I think that China increasingly has an argument here where they say, they look at things that we're doing and they say, well, what's to stop us from doing something similar? And that's one that is so disruptive that if it occurs, that's one that cannot be downplayed.
Right. Investors pricing on what's possible here. Hedge funds, when it comes to Venezuela, are calling this a gold rush of an opportunity. But I'm curious in terms of actual demand from clients. What are you seeing? What are you hearing from them?
Yeah, I mean, I think the thing that this starts to shift towards is more portfolio insurance. I mean, we already have an environment that is, ripe for uncertainty. You have high valuations in the United States. You have increasing geopolitical risk everywhere, obviously. And so I think people are reaching for increasing forms of portfolio insurance because, especially with the last few years, they look at things like the bond market. The bond market didn't insure you in 2022. And so for financial planners and advisors, I think they look at that sort of an environment and they say, well, we need to look to alternatives. And that's where hedge funds, alternatives, and things that are hedges and portfolios play an increasingly important role.
It seems like from the flows last year, people used treasuries and gold to sort of sleep at night while they bought U.S. stocks. But they didn't really bite on the international trade, which everyone keeps trying to push. U.S. is still beating international by a ton over 10 years, 5 years, 3 years. Is that something that you talk to clients about? Bogle would say you don't need international if you can stomach the volatility, so don't even bother. What do you say?
I think this is one of the very few things Bogle got wrong. And the reason that I like to use international stocks is in large part because it's a dollar hedge. We're thinking of this in terms of domestic currency risk, really. And so international is important in a portfolio for that main purpose. And you see this in years like last year where when the dollar is down significantly, you get a big international boost from that dollar decline. And so it operates as a domestic currency hedge in a lot of ways where you're getting almost like a little bit of an inflation hedge actually through international stocks. And so I think from a planning perspective, it's good to get that international exposure primarily for the currency hedging.
And Cullen, you mentioned alternatives in this environment. And you think about the term alternatives, that means a lot of different things to a lot of different people potentially. So, when you're talking about alternatives, what context are you using that term?
Yeah, I mean, I typically think of alternatives in the form of portfolio insurance. We want to be diversified in a way where we're going potentially beyond bonds, especially in environments where bonds potentially aren't hedging portfolios as well as they once did. I think bonds are actually a better hedge today than they were, many years ago. Yields are much better. Even T-bills are yielding real returns. So you could argue that's almost the ultimate form of insurance in a lot of ways. But I think that going beyond that especially for particular circumstances, is important. I think people that didn't have real assets in years like 2022 when, we saw the big boom in housing and commodities and everything, those people, they really can benefit from owning things like commodities, and this goes way beyond just owning gold. I actually think that gold and silver are probably two of the riskiest commodities out there. So being diversified in the commodity space is super important these days.
All right, Cullen, really appreciate your time. Happy New Year to you. That is Cullen Roche of Discipline Funds. Meanwhile, we have to get to some breaking news right now. The headlines crossing the Bloomberg terminal that Maduro has entered a New York court to face those narco-terrorism charges and that the hearing has started in that New York courtroom. Joining us right now from outside that courthouse in Manhattan is Bloomberg's Miles Miller. Miles, set the scene for us. What happens now?
Yeah, 12:01 this afternoon, Nicolas Maduro and his wife came into the courtroom here at 500 Pearl Street wearing their orange jail uniform inside. It's unusual because defendants in cases, high-profile cases, are able to wear suits in court, but, they were brought here without any of their belongings, and so they came into court wearing their olive jail uniform. What we know right now is that they're going through the process of this case. The lawyers for both of them have just made their appearances, and the judge summarized the charges laid out against them. The judge said his job is to ensure that this is a fair trial, and he's reading a summary of these 4 counts, which really amount to facilitating narco-terrorism. The prosecutors have laid out a case here in which they say Maduro and his wife used government planes to facilitate drugs going in and out of the country, not just any government planes, but the government planes that relate to the state oil company. They say in addition to that, when narco-terrorists from groups like Tren de Aguas or FARC wanted to get drugs in and out of the country, they gave them diplomatic passports in order to facilitate that happening. And this wasn't just for a short period of time. The allegations are that this happened for 25 years, when he started in the assembly to becoming the foreign minister and then his reign as president. And as you spoke, there is a new president elected in Venezuela, or appointed in Venezuela, Jorge Rodriguez, the head of that National Assembly. The court case will continue into the afternoon. We're expecting to hear what the schedule will be for motions in the case and when a trial could start. That may not be until about 2027. And of course, we expect it to be remanded back to MDC, that jail in Brooklyn.
So until 2027, that means the former president of Venezuela and his wife will be stuck in Brooklyn during that time. What happens during that time?
There'll be a number of court hearings, motions in the case. They'll be able to present evidence. They say that probably that they feel exonerates them. The government will be able to present witnesses, and be able to say, okay, this witness stays, this witness goes. It's all the court motions before they even get to a trial. Of course, there are discovery laws here. Perhaps they want to enter a plea. That all happens in that time period before there actually would be a trial.
All right, Miles Miller, really appreciate your joining us. Miles Miller is live outside the SDNY courthouse in Lower Manhattan. And just to recap the headlines that we did get, of course, Maduro hearing has begun in that New York courtroom. At the same time, the Venezuelan Assembly has nominated Jorge Rodriguez, the son, to be president. So we will give you more details as we get them. This is Bloomberg.
Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. It's time now for the ETF Brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with AT1s. Invesco has an AT1 fund. Those are additional Tier 1 bonds. Remember, Credit Suisse's AT1s were written down a couple years ago. But you can see that this ETF took in nearly $700 million in 2025. That is a record, and it comes after several years of outflows. So we'll see if the momentum continues in 2026. But let's also talk about BINC. Of course, that is the actively managed Rick Reader ETF out of BlackRock. This interesting chart coming from Bloomberg Intelligence showing the asset growth that BINC actually on path to unseat some of the most popular actively managed funds out there, including JEPQ, including JEPI. Still far away, but certainly if you take a look at the pace of that growth, it's something to keep note of. But let's end with an interesting story that hit over the past week or so, and that is the Tuttle Capital government grift ETF apparently, reportedly, has been rejected by the three major exchanges. Scarlett, of course, we're talking about the New York Stock Exchange, NASDAQ, and SIBO. Really a fascinating move.
Right, without any explanation either. So let's talk more about this with Bloomberg's Isabel Lee, who's been reporting on this. So, Isabel, tell us a little bit about what this ETF, the proposed ticker is GRFT, aims to do.
So this was filed in June. We wrote it because it was cheeky. It was new. It's like GRFT, grift. And then the ETF name is Government Grip. It's designed to target firms with political ties to Washington. So Matt Tuttle, the CEO of the issuer behind this, said they will scrape speeches, whether it's commentaries, or they will look at the companies that members of the Congress disclose. Basically, it's anything, and it's not specifically tied to any politician or any administration. He just says that I want this to be, quote, translate political influence into investable insights. So that was in June, and we were waiting. When will it launch? And then so I was asking him and waiting, and then months after we find out that no exchange wants to list it.
So a big no from the three exchanges reportedly. What is the path forward here for Matt Tuttle and for this fund?
I think if it's a no, then there's nothing you can do. So according to him, his only hope is Texas. So it remains to be seen. Texas Exchange, which is set to start operating, I think, early this year. But if not that, I asked him, what about Canada? What about others? Are you open to rebranding it and stuff? But he said no, he wants it to be grift for now.
He wants it to be grift, so he doesn't want to change the name of it or the ticker for it. Eric, can an ETF actually launch as an ETF without an exchange behind it?
No, not really. I mean, that's the whole point of the name, exchange traded fund. So it wouldn't be an ETF at that point. It'd be like a GBTC. Now, Nance, by the way, to me seems equally cynical. This is the Democrat trading ETF, and it's got 260 million.
GOP.
So it's interesting. It cruises the GOP one. Nance has the more assets and does better, though. They drew a line with grift. I think Texas will list it. The people who run the Texas exchange are from CBOE, and I think they were the most liberal of the three exchanges. So I have hope there, but if not, this is such a Tuttle story. I'm holding out for his alien tech ETF.
And you said this is the first ETF you can think of that all the exchanges rejected.
I've never heard of this. This is like, like gangster rap back in the day, like Walmart wouldn't carry the rap album or something. It's like, I've never heard of this.
But this feels very on brand with Matt Tuttle, right?
Yes.
He's a little bit of a provocateur.
Very much so. But it's interesting because last year, Katie wrote a story that it's a record year for launches, flows, and volume. But now, Eric was the one who said it's like the parents are saying, No, because the ETF industry is like a teenager pushing boundaries, using Eric's words.
All right, Isabel Lee, thank you so much. Fantastic story here by Isabel on the prospects for GRFT. All right, just to recap the headlines here, Nicolas Maduro has been arraigned in New York City courtroom. This is downtown Manhattan. He says he is not guilty of the U.S. narco-terrorism charges. We'll keep you posted on further headlines. This is Bloomberg. This is Bloomberg ETF IQ. We want to go now to downtown Manhattan, where our own Miles Miller, Bloomberg News senior reporter, is standing by at the SDNY courthouse, where Nicolas Maduro, the former president of Venezuela, has appeared in a New York courtroom and has said he is not guilty of U.S. narco-terrorism charges. Miles, give us more.
Yeah, I mean, it's a remarkable contrast to read. You know, we have two reporters in the courtroom, and to read what happened in court. He comes into court at 12:01, sits down in a jail uniform, and the judge lays out the case against him and asks if he wants him to read the indictment. He says no. He then tries to launch into a statement saying he was kidnapped, saying he was innocent, and that is sort of unusual in a U.S. courtroom because the judge is the highest authority in a court, not the sitting president or a removed president of Venezuela. And he didn't sort of understand that, and the judge made that clear. There'll be time in this case for you to make your case, but I'm the judge here, and all I need to know is if you are pleading guilty or not guilty. And he entered that plea of not guilty. The judge asked his wife how she plead, and she also entered a plea of not guilty. In fact, she said, not guilty, I'm completely innocent. The case laid against both of them is one that is very serious. 4 counts of facilitating narco-terrorism and bringing weapons in and out. The judge asked if they wanted to have a reading of this case, and it would have taken quite some time because it's a 25-page indictment, and in it they lay out a 25-year span of supporting narco-terrorism, getting diplomatic passports for folks who were involved in bringing drugs in and out of the country, using state-owned planes in order to facilitate that drug trade. And if that's not enough, the involvement of both Maduro, his wife, his son, and even ministers in the government. This case is very stark. You have the sitting president of Venezuela brought in here wearing jail garb, and he likely will return to that Brooklyn jail where he came from to wait out the days before this goes to trial in 2027.
All right, Miles Miller, really appreciate your giving us the latest there. Miles, of course, in Lower Manhattan at the SDNY courthouse. Let's talk a little bit more about Venezuela, but specifically Venezuelan bonds, because joining us now is Jim Craige. He is CIO and head of emerging markets at Stone Harbor Investment Partners. You guys have an ETF, Virtus Stone Harbor Emerging Markets High Yield Bond ETF, the ticker's VEMY, where you have a 2% allocation to Venezuela. How does the news of the weekend change how you move forward?
The news was very significant. So we began adding to Venezuela a little over a year ago, and since then it's up a little over 100%, and today it's up 30%. So the implications are the defaulted debt that we own in the fund and across our strategies has increased significantly in price, and it should continue to do so. It's trading at 35 cents on the dollar, and the claim value is between 1.5 and 2 times that. So you do a pretty simple restructuring. We expect a lot of value out of this.
And, you know, we've seen South America going through a lot of changes. Are you bullish on South America in general, buying more of the debt there? Because I see you have a lot of other countries in your portfolio. What's your take on the whole continent?
Most definitely. We're very bullish on Argentina, 10.5% yield. We're very bullish on Ecuador, 9.5% yield. But more broadly, the region should continue to do very well. EM broadly should grow 2.5 to 3% above the U.S. And Latin America will be a big part of that. So we're very excited about Latin America.
On the flip side of that, I mean, digesting the news from this weekend, obviously you would think this has a lot of implications for EM broadly. Are there any regions, are there any countries where you would de-emphasize the debt here?
I think oil exporters more generally are probably something we don't want to be overweight right now, and that's because we would expect the supply to increase because of the Venezuela exposure. We're already in an oversupply market right now anyway, so this will not help. So we're not as bullish on oil exporters more generally.
You're up about 50% since the fund came out, beating EMHY. Congrats. What percentage of that is the currency versus the debt itself?
It's all the debt, so everything is dollar denominated. EMFX has done quite well, but the dollar denominated debt has also done quite well. So.
Let's say it wasn't. Like, how much currency are you saving then by being in dollars?
So you're saving a fair amount in the currency. The currency has a fair amount more volatility, and real rates are very high. So I do think there are opportunities in places like Brazil, potentially in Colombia as well, South Africa.
You had said that you were buying Venezuelan bonds about a year ago, so you had this inkling that this was a good time to start loading up, and it feels like there's very much a asymmetric upside here to that debt, especially if there is a restructuring. What is your timeline here for restructuring?
I would expect it's going to be 18 months to 24 months, somewhere in that time frame. I might be positively surprised, but there's the restructuring, which will be significant for the defaulted debt, but also just the amount of investment that's going into Venezuela will be staggering.
So high conviction, it sounds like, when it comes to Venezuela, when it comes to what we're seeing unfold here. But that being said, what risks are you monitoring as it pertains to this situation?
You definitely could have a transition that is more disorderly. It's not our base case, but that's certainly a risk that bears watching. So we spent a lot of time talking to political analysts and others in the Treasury and State Department, et cetera, to try to get a handle on that. But we're very confident that that's not likely.
About 45 seconds. I was looking at the return attribution of your fund. The best performing country is Lebanon. Today I learned this. What's going on there that's so good?
Sure. Similar to Venezuela, you have defaulted bonds that are trading in the 20s. Your claim value is double that. So right off the bat, you've got a lot of upside embedded in the price, but also you've got some transformations there. Amr Bassat is a part of the economic team in Lebanon. He's a good friend of ours and a former competitor. So a lot of respect for him, but also they just passed a gap law, which allows for some of the bank debt restructurings to be recognized and dealt with. So we're very bullish on Lebanon long term.
All right, Jim, really appreciate you taking the time. A fascinating conversation. That is Jim Craige of Stone Harbor Investment Partners. And you can read all about this drill down, plus the latest in the ETF industry, when you subscribe to my weekly ETF IQ newsletter. That is Bloomberg.com/ETF IQ newsletter. But that does it for Bloomberg ETF IQ, the TV show. I'm Katie Greifeld, along with Scarlett Fu and Eric Balchunas. And this is Bloomberg.